Hi everyone. So it's a panel discussion on the global business of tokenization. The entire business revolves around tokenization, the challenges and opportunities. The moderator, Miru Patel, is the CEO of Sapien Group, Coup Flash Group, and it's a good time. Today is his birthday. Let's wish him a happy birthday, all of us.
Thank you, guys. Thank you all.
Thank you. And we have a eminent panelist. We have Greg D. Prisco. He is the Maker Foundation Head of Business Development. We have Alpesh Doshi, Managing Director, Redcliffe Capital. We have Khelje Dekrush, Ku, Can ETH, all the three panels. Over to you, Miru. Go ahead.
Hello and welcome, everybody. So let's kick this off. We've got 45 minutes. And the way I'd like to see this globalization panel is for us to do a quick intro. We'll get some pickup questions and then some visionary stuff. What are the problems? What are the challenges in tokenization of assets? And then move it from there, okay? So let's kick off with some quick intros from everyone, and I will go last. Kelj, now that you are representing a friend of mine, Gaurav, you can run with that.
So my name's Kelj De Cruz. I'm the founder of Blockbank and the co-founder of CanETH, which is the whole Ethereum 2.0 staking movement that we're a part of. I got into the space back in 2013. I was mining in my basement.
Fantastic.
I was probably I was one of the first people to sell cryptocurrencies on eBay shortly after they started blacklisting my postings. And then I got out of it, or sort of, I got out of it in 2014 with the crash of Mt. Gox. 2016 around, biggest mistake of my life, 2014, but whatever. There's a lot of those mistakes, but 2016 comes around, cryptocurrency is hot again, and ICOs are hot. I get back into it from my software background. I started developing Blockbank, which is an AI assistant for the cryptocurrency space. And what we've done is we've bundled up different usability cases and different tools into one single application, and we're giving our users an AI assistant to help them navigate it. Not only that, to navigate the whole cryptocurrency space.
Right.
And then last year, with the whole Ethereum 2.0, that's when I got connected with Quorum again, and we launched CanETH, which is we're going to be probably the largest Ethereum 2.0 staking platform for institutional investors. And some fun things happening there.
Thank you, Kelj. Yep. Thank you, Kelj, for that intro. Alpesh, do you want to take off next? Quick 2 minutes intro. You, your company, and then less of the advertising afterwards. So you can do all that now.
Don't do advertising. Hi, I'm Alpesh Doshi.
I'll take my hat off as well. Advertising that.
I'm Alpesh Doshi. I got into the blockchain space back in October 2014 when we shared our office with the Ethereum team. They'd just done an ICO, came over to London, and turned up in our office, 6 guys. Vitalik was there, and George Hallam, and Stefan Tual, and those guys. And I said, "What are you guys doing?" And they said, "Ethereum." I said, "What's that?" So I read the white paper. Being a technologist by background, I thought, this is going to change the world. There were some expletives there, but I won't say them. So we started working in the blockchain space back then because we saw the opportunity. The topic of this panel is on tokenization, and we saw the opportunity around tokenization early, probably too early, back in about 2015-16. We started working on our first tokenized real estate asset back in mid-2017, realizing that pretty quickly that there was no market, there was no liquidity, there was no infrastructure, there was no regulation, or very little regulation. And so, we're 2.5-3 years later, and we're now seeing the emergence of some of those pieces, and I think tokenization has a bright future, so hopefully we'll discuss it today.
Great. Thank you, Alpesh. Greg, over to you.
Thank you. Yeah, so I'm Greg DePrisco. I guess we're starting with when we got into crypto, right? So
No, you can do your bit.
I got into Bitcoin back in 2010. I was a college student, and
Oh, wow.
I was mainly there for the philosophy at that point. I
So
didn't buy Bitcoin.
did you buy from Nick Spanos, my good friend?
I don't know who I bought from, but I was doing it on some forum where I had to send like $10, and then they'd send me $10 of Bitcoin, then I'd send another $10, and we did that over and over.
That was Nick.
And
Nick in New York, your part of the world. He started the first exchange right next to Wall Street illegally.
yep, I remember the Bitcoin Center.
That's Nick Spanos, good friend.
You know, funny enough, I'll fast forward a bit. I work for the Maker Foundation now, but when MakerDAO first got started in 2015, our founder, Rune, was living with Nick Spanos in New York City and going to the Bitcoin Center.
There you go. There you go.
So yeah, there's a little bit of a shared background there, but yeah, I was mainly in it for the libertarian philosophy, and I didn't really understand the technology at the time. I lost all those Bitcoins. I mean, I don't know anybody from that point that actually kept the Bitcoins. But I got out of college that year, and I became a commodities trader. I was in the trading space for about 7 years, but I was always keeping track of the crypto industry because I just thought it was fascinating. And naturally, I was always viewing it from a trading perspective because that's the viewpoint I had of the world. And I said, when BitShares came out, I thought to myself, wow, this could really change trading because right now I'm paying an absurd amount of money to the CME every time I click a button. Maybe I could not pay that if I had a BitShares-like solution. As we know now, several years later, BitShares didn't work out. But Ethereum came onto the scene the next year, and that kind of made the buttons click for me in my head. So I went to my boss and I said, we need to get into Ethereum. And fortunately, unlike in 2010, he listened to me this time. And we went down that rabbit hole together. And now we both are at the Maker Foundation for a few years. And just a brief introduction to Maker for people who don't know it. Maker Foundation is the entity that bootstrapped the MakerDAO ecosystem. And MakerDAO is a completely decentralized infrastructure where token votes control the entire protocol. The core output of the protocol is a token called DAI. DAI is a stable coin, and it tracks the price of the US dollar. It's the third largest stable coin on the market.
Fantastic. Thanks a lot, Greg. Oh, so whilst we're on the crypto space, my background is very much a serial entrepreneur, techie, and I was there right in the early days of .com with the right company in the Valley, Silicon Valley, and with Sun Microsystems, where we started the whole .com thing, Java, etc. And we were looking at cryptography there, distributed systems even there. So one can argue, when did cryptography and decentralized infrastructure start? That's when it all started, during the .com days. I remember advising tons of companies how to decentralize their data sources, all the way through to their data centers, to have anything from mirrored sites, all the way through to cryptographically having mirrored sites across the world, transmitting data, and having local apps service local clients, etc. So in my view, that's when it all started. Long story short, in the blockchain space, like Greg, as I said, I know Nick Spanos and quite a lot of people who have been fortunate enough over the last 4 or 5 years, been on stage with, speaking at, etc., including the infamous Craig Wright, done various fireside chats with them. Greg, you said you were a trader, Tone Vays, many events with Tone, people like that. So I got into it hardcore, even though I was invited to join, albeit not in an appropriate environment, in a nightclub, dare I say it, and the guys saying, hey, your champagne bill tonight can buy you so many thousand Bitcoins. What are you doing? Spend 3-4 grand on this Bitcoin. I say, it'll never work, because governments, banks, all these people will kill it, even though I like the technology. Lo and behold, 5 years ago, I decided to get into this tech in a big way, because I was a look, feel, see, touch type of person. If it doesn't have any asset backed or asset pegged or any security behind it, it is not going to work. And especially in the financial market, there's too many cartels that you will displace their jobs, be it one or better word. So I decided not to get in, but 5 years on, I got in, and probably one of the biggest advocates out there for this whole space. Topic today, let's move on, is about global tokenization. So I'll kick off as I'm a moderator and a panelist playing two hats over here. Is, about 3 odd years ago back in the Valley and even before that in Singapore, speaking at some of these events when ICOs were almost new, I said, ain't going to work. You need to have some security, as I said earlier, and even having a big debate with the likes of Tim Draper in San Francisco almost 3 years ago. I wanted to digitize assets, meaning gold or real estate, because that was my background. And I even remember Kelj speaking to Khurram about 2.5 years ago, how to tokenize buildings and things like that.
Yeah, that's right, real estate.
Yeah, real estate, and I showed him exactly what the model was, etc., and had lots and lots of fun and debates talking to him, because that's when he wanted to start going into it. So I said, look, this is what I've done with eProperty Wealth, etc. So I have various views on it, but I will ask each one of you what you think, and we'll start with you, Kelj. So since those discussions with Khurram, I have a view that real estate, if it's one building, it's easy to tokenize. If you're trying to do it like a whole ecosystem for the real estate market, I got out of it 3 years ago saying I will tokenize gold, which is what we do just now in Sapient Group. We tokenize gold. We have our own ecosystem. We have our own blockchain. We have our own wallet. We have our own staking and masternodes. And that whole ecosystem is there, including crypto stations and ATMs. Okay. So that side is low-hanging fruit, and then next will come the NFTs and the property, but per building, not as ecosystem. Kelj, what you guys think, and what
I still think we're a little bit premature in bringing tokenization to the real estate market, because there are a few bridges that are still required. Legal being one of them, and the second is the banking sector. Right? How do these people get their investments in and out in the model that we have in our heads of how this should operate? Right? That seamless process is still not there. I definitely do think it is part of the future. It's just we need to get the banks and the governments on board.
All the stakeholders, basically.
Yeah, to get those things sort of working properly.
Yeah, I understand. You mean by the interfaces for conveyance, solicitors, lawyers, land registry, all of these people.
Everyone needs to be on board. So it's a little bit premature, but kudos to a lot of the companies that are actually doing this or attempting to do this, and they're building that path out for the future companies who are going to be successful in doing it. But yeah, that's my 2 cents.
Yeah, and do you see, just to add on, which I want your view on it, do you see that day will come this side of 5 years or more than 5 years?
I think given the pandemic time that we're in, a lot of things have been fast-tracked, I feel.
Yeah, but you can't fast-track government. And you can't fast-track banks, and you can't fast-track conveyancing people, and you can't fast-track lawyers.
I see a lot of people making that move, actually, which is good. In the next 5 years, as long as we see like Ethereum making their changes that they're trying to make to sort of reduce the cost of transactions and the speed of usability and stuff like that, 5 years would be a nice time span to see this actually happen.
But single buildings,
like developments in AI technology, that's also going to fast track that process.
Yes.
So a combination of the different technologies is where I see a lot of this going to help not just one vertical; it applies to multiple verticals.
Yeah. It's not just real estate. I mean, gold's already being done. Alpesh, let's move to Alpesh. Alpesh, you being with your techie head on and some of the stuff you're doing on real estate, where do you see this going in what sort of time span?
So, I mean, as I said in the introduction, we started working on real estate back in mid 2017 when one of our investors in our group is in real estate. So 25 in real estate, big real estate network. And, we started talking to some of the real estate guys out there back then and saying, hey, you want to tokenize your property? And, the only thing they were interested in really is, can I raise money? Can I invest in a property? Can I refinance my asset? can I get a yield and a return in a safe, low risk way? And that's it. They didn't really care how it was done technically. They didn't really care about anything else. And so, that was the message from the real estate industry. And then the other side of it is, which I also mentioned near the beginning, is the regulatory infrastructure, the ability to build all the infrastructure pieces. I'm not talking about technology infrastructure. I'm talking financial markets infrastructure. And Greg will know, working in trading, my background's in financial markets. So I've worked in front office trading in different instruments like equities and FX and derivatives. So if you could look at the equivalent of what exists in the market to be able to do trading of standard financial instruments, then you start thinking about assets, tokenized assets, of whatever kind. Then you need that kind of infrastructure to be able to then build, deliver, operate, custody, manage, lower risk, pay for, all of those things matter. From a regulatory perspective, it's a really big barrier, because unless there's proper regulation and there's no proper infrastructure, the people with the money, they have family offices, the sovereign wealth funds, the institutional investors who would buy real estate won't come into the market because they can't safely store and custody their assets, because that's what they use for today. So I think you asked earlier the question about when will this happen. We've seen a lot of change in the last 3 years. Regulation is emerging. One of the recent things was fantastic. The US regulators have said you can put financial services companies now can put stuff on the public blockchain, which is thank the Lord, because this is one of the key challenges. And so we're seeing these little by little things are coming into place. However, it's then going back to real estate asset owners. Are they interested? Now, a year ago, I was talking to some of the banks just before COVID's happened, who were getting demand from their clients that wanted custody of digital assets. So, and this is one of the world's largest custodians, and they were getting need from clients. Now that shows there's demand. Now, obviously, with COVID, that's all stopped. I'm pretty sure that none of these clients are looking at this.
Not really. Sorry to cut across there. Sorry.
If you have any different view, what I'm seeing.
Yeah. So I
have to be demand, and then
yes. So I mean, as I said, I've been trying to do this for 4 years, but we've said let's do the low-hanging fruit in digital banking, gold-backed coin, our own blockchain, our own masternode staking, our own version of the blockchain that gives you staking rewards, all of that. And then we'll do the real estate side of tokenization, because there are so many companies who will do custodial services of digital assets today. So many of them now, whether it is gold tokens or whether it's real estate tokens, many companies doing custodial services. The challenge, which is what we should look at is trying to get a lot of the stakeholders to buy into it. And if you think about, in my view, the whole blockchain space is about getting rid of that middleman, because now it's power to the people, as I call it. They want to go directly to the buyer, and he has to have that infrastructure to sell it and give them returns. Whether he puts his building with the yields, be it a commercial property or being a residential property or a buy-to-let in UK terms, they will get the yields automatically without any of that middleman. The conveyancers, the real estate agents, the brokers, the banks. So you'll have P2P type of financing, P2P types of collecting money, and just a custodial service with an exchange that you can then say, I will exchange this as a token for XYZ project base onto an exchange. And with that exchange comment, I'd like to bring Greg in as a trader exchange guy, even though I mean we have our own exchange as well. I'd like to see your view, Greg, on how do you see when real estate tokens, based on a building which has certain yields, if it's a commercial or a residential, depends what type of property it is, how do you see those kinds of tokens being traded on the exchange?
Yes, so this is actually something that the maker community has been researching for several years. Yeah, and I like to think we're probably the furthest ahead in its implementation. We actually have a vote that happened in December, which is onboarding the first, what we refer to as a real world asset collateral provider into the Maker ecosystem. Quick background on how DAI is created in the first place. Unlike other stablecoins, which take an existing banking liability and issue an IOU against it, Maker generates that liability on chain by having collateral pledged to a smart contract and then letting the user basically mint their own loan against their asset. So
do you hold custody of the asset? Do you hold custody of the asset?
The smart contracts hold custody of the asset. So it's actually it never leaves the user's custody. The user just can't unlock their assets if they don't repay the DAI. Gotcha. So, but that's how DAI is created. That's not how a normal person uses DAI. That's how a generator uses DAI. There's two different customers. There's the people who use DAI as a stablecoin, and there's the people that use DAI as a loan. I'm talking about the people that use DAI as a loan. So because DAI is backed by collateral, we need a stable, diversified pool of that collateral. And just having cryptocurrencies is not very diversified. Everything is almost perfectly correlated to each other. So for several years, our community has been researching how do we bridge real world assets into these protocols. And honestly, the answer has not been tokenization. Tokenization is almost inhibiting getting assets on chain, because when you wrap an asset in a token, you invite all sorts of different regulators and technical issues that you may face. Whereas, the whole purpose of tokenization in the first place is to get a better cost of capital or better access to capital. A token doesn't do that implicitly. You need something to do with the token. So what I think the most innovative structure we've seen come out of our community is basically if you were to unpack a mortgage-backed security and look at the trust structure that's underneath it, get rid of the securitization part because there's no investors here. Just a trust structure that backs the recourse of the asset, which that's what maker holders are really after. They're after recourse in the event of a default. We've seen some community members propose very innovative trust structures where we essentially abstract the role of the smart contracts to a regulated trust company and then just let Maker do what Maker does best, which is generate DAI. So we're seeing a lot of progress in real world assets, just not a lot of progress in tokenization because there's no token that represents that asset.
Yes, and that's a very, very interesting point. But Greg, and I'd like to see Alpesh's view on this. Do you think, Greg, with all these things, one-liner from you, and we'll let Alpesh expand, do you think that we in the blockchain, crypto, DeFi, NFT, whatever market you call it, tokenization of asset, do you think we're making it too difficult for a property, think of them as builders or traditional bricks mortar types of mindset, plus the investors who buy in there, like the family houses, ultra high net worths, etc., because by far it's like 250 trillion largest market on this planet. Do you think we're making it too difficult for them to even buy one of these tokens, let alone exchange it and sell it? One liner, and we'll see Alpesh's view on if there's a better way of doing this. Making
one liner for me.
Yes.
I don't think they need to buy a token. I don't see the purpose of that.
Yeah.
So I understand where you're coming from, Greg. What you're saying is you lodge the asset. That asset has a cash flow and a risk, and you're issuing DAI on the back of the asset. So you need to know anything about the asset itself. And so effectively, one of the challenges around tokenization in real estate is tokens are non-fungible. So you can't exchange. So what you're effectively saying is, hey, don't worry about the asset itself. Lodge the asset, create DAI, and then you've got an equal playing field to do exchange or whatever you want through DAI. So I get that, which is obviously one way of doing it. I think the thing for me around the whole market is that DeFi. I'm calling DeFi a bubble. I use
call it a DeFi and a non-fungible token. I think you touched on it. That's where I want to go to see what your view is. Can it be a DeFi NFT type of token for real estate?
Yeah,
if you have your view on it, because
for me, if we talk about DeFi and what DeFi has been doing in the last two and a bit years, at the moment I see DeFi as a bubble. I call it a bubble.
For sure.
That bubble is lots of amazing innovation going on, but it's just not escaping that bubble at the moment. I mean,
I call it a vacuum.
Yeah. So I call it a bubble. But hey, bubble is maybe a derogatory term. I don't mean to be.
It's a bubble with no air inside. All right.
because
Let's settle that
Gustav,
one.
Greg, I don't know if Gustav has mentioned me, but he was on one of my panels last year at one of the blockchain conferences. So I know Gustav, and
Oh yeah.
and we were talking about this bubble thing, you know, and we were discussing when will it escape. And this is before anybody knew about COVID. And you know, the key thing for me is that when you're trying to get the market to move, they've got to understand how it works. I mean, it's really basic. Real estate people, no disrespect to them, are not that sophisticated. You know, they don't know anything about technology.
That's what I said.
They don't know anything about
Builders, bricks and mortar. Yeah, simple.
They don't know anything about that. All they care about is what I said. You know, they want a risk and return. They want to be able to refinance assets or finance an asset. And if it can be explained that way in simple terms and they can trust it, they'll do it. And that's when the market will take off. And that is, you know, the technology. I'm a techie. I love tech. I love blockchain. I love all the stuff. The reality is they don't give a shit. Sorry. And for me, that is, if we can get like that, that's when we will get adoption to scale. And the financial markets, the traditional financial markets, have to have faith and trust in this stuff because, frankly, the wealth managers, the investment banks, their customers are the ones that we have to convince. And yes, there is movement, but they trust the big brands. Let's be honest, they trust the brands because they manage hundreds of billions of assets for them. So we have to convince them. They're not necessarily technologically advanced, know how to do it, but they will work with people like, you know, this community to do it. And I think that's how it's going to happen. And I think DeFi will eventually, and I think it's even longer than 5 years, but DeFi will eke into the market. Which assets for, I don't know. But, you know, it will be great to figure out which one it is, and that will create
I mean, so we looked at this 4 years ago, 3 years ago. We're still looking at it, and the art and science of all of this is simplicity, and that's where the sophistication lies.
Yeah,
and I'll get to you, Kelj. So, Kelj, in that view, to keep it simple, because you know, a builder or an investor, all they care about is show me the money. If I invest this much into your project, what kind of returns I'll get now in terms of yield, and what will I get when I liquidate or get out, i.e., could I liquidate early because that's what the REITs and all these guys do, the REITs, you're locked in, or you could trade your units as and when you want. But typical traditional investors generally say, I'll buy into this project and this is its exit term. So it needs a halfway house approach to keep it simple. Where do you think that is going? What are you guys doing as well on that?
Okay, so two things there. One, I don't believe there is the brand out there that everyone knows of that does real estate tokenization where they can participate in
I don't think there is one. No, there isn't one.
Right now, it's all lending or interest-based projects that are really hot. So what we are doing is we're basically making crypto simple. So a simple onboard and off-ramp on the platform for Blockbank, where users can participate in different projects. So that's our goal, to make it accessible to everyone. And there's a few things that are involved in making that happen. One is by creating that banking bridge so that people can move funds from fiat to crypto in order to participate in these projects.
Yeah, but that's about digital banking. We're talking about digitization of assets just now.
That bridge needs to be there. I believe that bridge needs to be there for them to actually purchase with their crypto.
Yeah.
Right. You want to go $200,000 in crypto. You go to your bank and say, "Hey, transfer it to XYZ."
Yeah. No, sure.
Yeah, I'll do this once, but
yeah. But there's again lots of people doing the digital banking side. We've got our own even crypto stations, which Khurram is looking at, by the way.
Yeah. Yes.
So right now we're having your own smart cards and all of that. We are with our all-in-one smart card with onboard crypto, all of that. But the digital banking side, that's why I said we went in that at stage one, low hanging fruit, and then do the digitization of assets. So we've done digitization of gold already. We've got the full on digitization of bank, which is what you are talking about. But where do you see in terms of your real estate side, and I know you guys are looking at that as well, of tokenizing assets, which what Alpesh, Greg, we're all talking about, whether people trust it, they don't trust it, whether we are simple enough yet. I don't think it exists personally in one company. Lots of people trying it, lots of people doing a single project, tokenize it. In my view, there's no rocket science in there. It's like the old SPV shareholding structure. Where's the sex in that? There's nothing in it.
To get the market
nothing in this. You can do it on a spreadsheet, that side of stuff.
To get the full market going in that direction, to capitalize or participate in real estate based tokens.
You know where I'm going. Yeah,
it's a while away, I think.
It's a while away.
Unless we get a big brand saying, "Hey, this is what we're doing," and that brand is trustworthy, then it's a different story.
But even if a big brand did it, they would go through the same challenges. Big brands, for a start, they are not as agile as we all are. We can do it a lot bigger, better, faster, uglier. And that's when the big brands come in and steal our ideas and market it, whatever. Yeah. So they are not going to be agile enough to be innovative. The innovation comes from the likes of us lot. So that's where I wanted to see what you guys are doing in that front. I mean, we're thinking of taking an asset and turning almost into an NFT with a custodial service, with our own peer-to-peer exchange loan system. So we still cut a lot of the middleman, but we have to buy the asset first and then tokenize it. And then turn it into an NFT or something.
My 2 cents, I think we can do that for the next year and a half, I think.
Yeah, that's what I mean, 2 years.
Hey, wait a minute.
2-3 year window, I think. I think there's a 2-3 year window in it. Because I don't think the real estate business, in my view, is too many stakeholders, as we said. Way too many stakeholders to do the internet of properties, what I used to call it 5 years ago, or internet of real estate. Greg, let's bring you in. So in the space, because I see we are nearly short of time. In this space, very quickly, where do you think most of the innovation is going to come from? He who gets this piece sorted out is going to be king. What do you think is that major challenge?
But so I still look at the tokenized asset as a vessel. It doesn't serve a purpose in and of itself. It's going to be designed custom fit for a protocol that makes somebody's life better. So the question, to answer your question, I would say the innovation is going to happen in the DeFi protocols themselves, where if they can offer a better cost of capital, better access to capital, better terms of that capital, then you'll see tokens pop up in all different forms. But the form of the token's irrelevant. It's how it gets to the final point, because that's the innovation.
So, I mean, if the thing with property is, unfortunately, right, the thing about owning a real estate asset is such a thing has been around for hundreds of years. Actually owning the asset, you have shares, or like we live in our house and we own this asset. There's something about that. What you're effectively doing, Greg, is there's a bit of an abstraction of that. Saying, don't worry about the asset. And that leap has to happen.
That mindset is not there.
Don't worry about the asset. It's there, and you've got something.
No, but I'm really more saying that the structures we have today are fine. The structures we have today are battle tested. They work. It's a matter of making them fit with DeFi. That's the innovation.
So the question is, it really boils down to why would you do it?
Yes,
so
exactly.
Why would you do it? What are you looking for? You're looking for.
You just create a token to create a token that doesn't do anything.
Right.
So you want to might as well have an SPV with multiple shareholding in a company. There's no sex in that. So what is the big challenge? Which nut do people need to crack? Should they say, you know what, we've got stage 1 or stage 2. Stage 1 is the financing side, which we've talked about. The stage 2 of now we can say we can tokenize a property. What is that nut to crack?
Well, it's the why. Why do you want to do it? Why do real estate investors do it? If you've got a family office and the family office has $1 billion worth of real estate, Why would they do it? Why would they tokenize it? One reason is to get cash, right? If I can take my asset and I can digitize it, let's call it digitize it in general, however it's done.
Yeah, but
And
I've got
cash in and they use that cash for other things with the backing of the collateral. Hey, that's interesting.
But
right?
here's the why. Here's the why. I mean, I'll answer you because, as I said, we started doing this 4 years ago. The why is very simple in my view. 250 trillion business. REITs, we know, are making a fortune. I know, and I was doing, by the way, I've done 2 investment funds of my own in real estate, including one in Eastern Europe in 2004. All right. One of the first guys who went there to do a real estate fund. Anyway, so crowdfund was the way forward then. So in my view, the why is how do you bring it to the average person? You know, if you've even got $500, $100 to invest, a REIT would take you, but look how much they'll scalp you. I know some of the commissions they take. I know they are 8 to 0.8 points or 1% operating fees, 20% off the top slice. Plus, there are various side deals that are done with builders, conveyancers, etc., where they scalp a lot of it. So that's where you want to cut and lose the 20, 30% in my view. That's happening. And how do you bring it to the average guy of the $1,000 mark who wants to get into that space yet not have paid that? So that's the why, in my view. You're bringing that market to the average $1,000 investor in a custodial, safe, secure where take 5-10%, which is fine, but you add the 20% on profit, you add the 2-3% agents fee, you add surveyors, you add this, you add that, it comes to 30 odd points having done a fund, okay? 2 funds.
But
so
wait, so forgive my skepticism, but how are you going to bring that? But how are you going to bring that to the average person when your investor pool is limited to accredited investors?
So this is where I say you need 2 people, and we've all touched on it. You need the financial bit plus the peer-to-peer finance. So the peer-to-peer finance will say, you know what? The builder wants seed investment. Here is stage 1. Peer-to-peer, we will finance you this, and we will get X amount of share in this and Y amount profit share. Then comes stage 2 to the build-out until they exit, until they finish, and then do a rental or whatever. So different people come in at different stages, just like how we had it in the IEO, ICO, STO rate, or even the DeFi tokens. Different people come in at different levels with lockout periods of 3 months, 6 months, 12 months, 24 months, whatever. These are all smart contracts that can be done. So my view is that why exists, because why wouldn't I now go onto this platform and take a property where I'm cutting a good part of 10% of middleman cuts out of it? Why not? And I'm only putting 1,000 in. I'm talking about making it accessible for the general masses rather than the super rich, because most real estate investors are the big rich people, right?
The reality is the man in the street doesn't understand the 30%. They don't even know the 30%. They don't know.
I think a lot of people are beginning to know where all the middlemen cuts are.
But what I'm saying is, but the reality is, somebody wants to put £1,000 investment into something. Yes, they're going to look at costs. Obviously, now with tracker funds and whatever, costs are absolutely, people are a lot more aware of those things. But the reality is, if you're in the know that you are in real estate, you know it's 30%. Does a man in the street know it's 30% on all costs? No. Do they really care? Not really. They don't really care. They say, can I give me a return on my money? And if it's 3% yield or 8% yield, you can grow. That's what they care about. Yeah. Yes. If you lower the cost and you demonstrate that, then fantastic. But to get all of that lined up to get the 30% is a huge amount of work.
And that's exactly what I'm saying. I think where they see the big companies giving 8% returns, and where you see the innovative ways giving 12 to 15% returns, and the internet is our best friend, you will see the breakdowns and people will start learning. Thank God for lockdown, where people are studying this stuff.
It's an education factor. I think a lot of people are getting educated these days on those.
Absolutely.
Where the hell are they going to? And the more
millennials
educated they become, the more grow blockchain.
Millennials are absolutely into this stuff.
That's what I said.
Millennials get older.
Exactly it.
One parameter.
That's the big market.
Yeah. So one parameter is to say, when do the millennials have money, right? That's again, that's a sort of, you could use that as a marker to say, yeah, look, when the millennials get to 35, 38, 39, that's a time. Now, unfortunately, that's a bit of a way, right?
Yeah, but I know a lot of young people investing in small real estate projects even now. So many, and they are aware what kind of cuts agents make. They are aware what kind of cuts the broker makes. They are aware what kind of cuts these typical crowdfunding platforms make, because these people are now transparent and sharing their spreadsheets before you invest. So there's so many of these.
I
being
just don't get it,
transparent.
though, because when you sell somebody a token, you're likely selling them security. So when you do that, I get the pitch, I get the why, but I don't think the how is tokenization. The how is convincing regulators that accredited investor laws are not what they should be.
Yeah, they're not up with the current.
Which is what we say. So that's the challenge. The why, which is what Alpesh was saying, I think the why is there. It's the how and the regulators and all these hurdles. That's what's stopping people doing it to an accelerated pace. Do we? Greg?
Yeah, I agree. Just I don't think it has anything to do with a token.
No, it's to do with real estate tokenization as an investment vehicle.
But you can just use real estate shares to.
Well, yeah, which is what I said. So there's no sex in it. So until you get those middle people in, that's when the magic will happen. So today, what good is it? You can have an SPV vehicle, as I said, but that's nothing exciting, nothing innovative there.
It's a little exciting.
Yeah, whatever. It's stage 1.5, all right. Kelj, so let's have a quick, we are nearly off on time. Let's have a quick 2-minute. What do you think is the way forward? Biggest challenge, and when do you see that hurdle being jumped?
Okay, so the biggest challenge, again, goes back to the regulators. I think we're going to hit the next wave of regulatory notices saying, hey, you did an IDO, you did an IEO, you shouldn't have done that. Here's your fine. I think that's the next round of things that's going to happen next. And it's working with them to get past it. And once we work together with them, I think things will move a lot smoother. We can tokenize real estate at that point. I think, we need to work with them first.
Yeah, absolutely.
They need to get their stuff together.
No, absolutely, bang on. Alpesh,
with anything, right? It's market demand. Find your market. Is there a market? Where's the market? It doesn't have to be a big market. It just has to be a market where participants are willing to take the risk and do something. And there's many different micro niches, if you like, in that. It's just finding one of them that you can get a bit of adoption. The regulatory environment in multiple countries around the world is coming, is happening. The technology is definitely there, right? The innovation is there around DeFi. That stuff is there. You don't need to innovate. That's all done. It's all there. So it's now then convincing the go-to-market, building the go-to-market strategy as the DeFi world. That's what I'm saying. Building the go-to-market strategy as the DeFi world. Okay, where is the market right now for this? And once you find that, that's going to go.
Yeah, I'd like to agree to disagree. The market is there, but as Kelj said and I've said, I think it's regulations and the SEC. In fact, I will say what SEC do even with Ripple, and there's a problem saying it's a security. Others are saying it's a currency. If they're having problems with even a Ripple, let alone a real estate for sure will be some form of security, even if it's window dressed with an NFT or whatever. You can window dress it till the cow comes home. It's a security. Greg, what's your final thoughts on this?
I agree with that.
No, you can add. I think, sort of. Go
Yeah,
for it.
I'll reiterate. Like I think that the innovation is in the protocols themselves. How we get the assets into the protocols isn't the relevant part. It's developing the protocols so that they offer customers something better than they have today.
Yeah, yeah. I don't think tech is going to be the challenge. Tech is not the problem or the challenge, but it's, as I think we've all agreed, it's the surrounding criteria and regs and things along those
Oh,
lines.
I know my
That's
actual final
all.
thought. I want to
Go
build
for it.
on something Alpesh
Go for
said
it.
earlier
Go for it. Go
about
for
the
it.
complexity of the systems. A rule of thumb that I live by is if you try and pitch something to somebody that at one standard deviation outside of what they're used to, they just won't do it. It doesn't
Correct.
matter if it's the best thing in the
Simplicity,
world. So
which
it's
is what
our
we said.
job as the providers of this and the builders of this technology to make sure that when we build the platforms, we keep the comfort zone within one standard deviation and we don't go insane.
No, absolutely. As I said, simplicity is the art and science of sophistication in this whole thing. As soon as you keep it simple for builders, lawyers, conveyance, land registry, and all these middlemen, stakeholders, once you address that to keep it so simple that even the REITs will say, we'll buy into this, that's when you've cracked it, I think. So, regulations and whether we'll be allowed to do it as a security going forward is the thing. And dare I say it, with Britain coming out and Brexit and all that, if they do something innovative and make it easier, it could really be a blockchain crypto island. Okay, with that, thank you very much, panel. Let's see if there's any questions out here. If we've got time, I don't know if Rajan is over here to do any questions. Rajan, will Bitcoin reach 50K? That's got nothing to do with real estate, but yes, I think Bitcoin will reach 50K. And I did a session with Tone Vase and quite a few other people not long ago, and we called the December thing to 25K. It happened. Then we calling now even end of this quarter, mid 40s again for sure. That's what I think. And if the SEC ruling with XRP goes okay, meaning not a security, then I see another big bull run coming on. Okay, what's the next question over here? Any questions here, Rajan?
I think there are some questions.
Give me, boss. Give me.
Young people got my.
Boss, fatafat, boss. Okay, I'm looking there. Okay, people saying, yeah, good point there. Yep, I get the good points. No questions as such. People agreeing regulations is a barrier. Yep, thank you, Simon.
So how do you summarize the entire tokenization, where it's going to go?
Let me summarize it. So I was looking for questions first, but that's fine. So the way we see it is technology is not really the problem here because technology exists. Real estate globalization and tokenizing it. Is there a market? Yes, there is. Is there a need? Yes, there is. What's stopping it is the middlemen and the regulators because their mindset, and I think us in the community are at fault here as well from the tech side because we don't make it simple enough for them to come on board for the problems and their needs to solve their problem and those needs. So the community needs to work, the tech community needs to work harder at making it simple, and the regulators needs to be embraced rather than got rid of. It's easy to get rid of some of these middlemen, but I don't think that's possible. We've got to work with them to begin with, and then slowly get rid of that. That's how we all see it, I guess. Agree, guys?
What about hacking and money laundering?
Oh my God, that's okay. That's happening, and it will never stop.
That's a barrier, right?
That is happening for centuries. People are doing the gold Brinks robbery, the great. So they're doing bank accounts now. They're doing crypto. So don't even go there. There's more money laundering happening with the US dollar by 99% than there is with Bitcoin. So let's start from there.
Great. It was a very deep insight on the financial of on tokenization. Thank you all of you for coming here. It's a good session. I think we are done for 4 hours, the entire webinar.
Thank you for putting this together, Rajan.
Yeah,
We like to say that we have a next week family tech investing family offices webinar. I think most of you suits for that. I mean, especially Alpesh is here, Miru is there.
Yeah, just ping us if we are available. We'll help you, support you. But guys, send me a LinkedIn or something like that if we are not connected already. I don't know.
Thank you for that. So
Thank you.
thank you.
Thank you for having us.
Thank you.
Bye.
Take care.
Bye.
Alpesh.
Take care. Bye. Bye.
Kalgi, thank you. Convey my regards, Kuram. He had done last
Yes, I
session.
will.
Two sessions he has done it last time.
Yeah.
I will. We're just in the middle of some amazing things right now. Some big growth spurts. And over the next few weeks, you guys will hear about it.
Okay, that's great. Okay, we end this session. We can go backstage if you want.
Say hi to Kuram for me as well, Kelja.